Good morning. Myself Ifatani Sabigum. I am a contract lecturer of Garment City College. Today my topic for PPT is goods and service tax, that is input tax credit. And this is my PPT number 24. In my earlier PPT, that is PPT number 23, I will explain you about the GST overview. And with the help of that overview, again I am continuing the topic with the help of GST input tax credits. So today we'll discuss about the input tax credit which will be applicable in GST. Input tax credit, that is our introduction. Input tax credit or ITC is the tax that a business pays on a purchase that it can be used to reduce its tax liability when it makes the sales. So in other words, businesses can reduce their tax liability by claiming credit to the extent of GST paid on purchases. So goods and service tax is an integrated tax system where every purchase by a business should be matched with a sale by another business. So this makes flow of credit across an entire supply chain and a seamless process. So how does ITC work? So for understanding the ITC tax perspective, we are supposed to have information about the tax credit purchases and its definition, that is an eligible credits, conditions for claiming input tax credits, and proportionate credits and other relevant points. So ITC on stocks, that is a transaction provisions and condition to be fulfilled to take credit of eligible duties or taxes, and how will it input taxes credit be adjusted and process of claiming input tax credit. So first we'll go ahead with our introduction. So ITC is a credit for tax paid on input. So every dealer is liable for output tax on the taxable sales affected by him. So the basic principle of GST that every business pays tax only on the value addition done by them. But in ITC, it is the mechanism by which the business set off their outputs tax against the inputs. So it becomes important to understand the list of items on which one can claim the ITC and the consequences of ITC that has been wrongly claimed, and also how the mechanism for the same can be automated. So when a trader sells a goods to a consumer, he collects GST based on the HSN of the goods sold and the place of destination. Let us assume that the MRP of the good is rupees 1000 and the rate of applicable GST is 18%. So the consumer will therefore pay a total amount of rupees 1180 for the goods, which includes a GST of 180 rupees without the ITC, that is input tax credit. The trader will have to pay Indian rupees of 180 to the government with input tax credit, or the trader can reduce the total tax that it will be have to pay the government. This is how it works. So let us assume that the cost of the good in the hands of the trader is 825. This includes 125 as a GST, and the trader can claim 125 as input credit and reduce his original tax liability of rupees 180 by this amount. So in other words, the trader will need to pay only 55, that is 180 minus 125 to the government. And how to understanding input tax credit, that is according to a tax perspective. Input tax credit is with the help of one of the example I'm explaining you. Let us assume that you are the owner of ABC garments and now you have purchased the goods, that is garments for selling, and on which you pay the freight for delivery. You also purchase a laptop for recording all your business transactions and make the payment for all these transactions along with the tax GST to your vendor. So for you, the purchase of garments is an input as you are using the same for the purpose of your business, and you already and simultaneously have purchased a laptop for entering your information which will be related to your business, that is the capital good, as the same will be capitalized in your books of accounts, and the payment for freight service is considered as the input services, as the same is used for the furtherance of your business, like the same laptop you are using for the sake of your business only. That's why you are adding that in your input services. So let us look at the definition of the same, any goods other than the capital goods used or intend to be used by the supplier in the course of the business will be called as the input, and the capital goods will be the goods the value of which is capitalized in the books of accounts of the person claiming the income tax credits, and which are used or intend to be used in the course of business. And the input services are the services used or intend to be used by the supplier in the course of business. And input tax credits in relation to a registered person mean the central tax or a state tax or an integrated tax or a unitary direct tax charge on any supply of goods and services for both made to him. So the integrated goods and services tax charge on import of goods, and the tax payable under RCM is in certain supplies of goods and services, and also when registered dealer purchase more than 5,000 a day from an unregistered dealer. So input tax comprises all taxes, all tax paid, that is IGST, CGST, UGST and SGST, and on forward charges or reverse charges basis, including the imports of goods and services. So the excluding taxes paid on consumption basis will be the tax paid by the e-commerce operators. Input tax credit means the credit of input taxes, and the reverse charges means the liability to pay tax by the recipient of goods and services instead of the supplier of the goods. And the output tax is the taxable is in relation to the taxable person, and this refers to the tax chargeable under this act on taxable supply of goods and services for both made by a person or his agent, but excluded tax payable by him or reverse charges. The ineligible credit, that is a negative flips, no value addition will be there and no double tax benefits will be there, and there will be no penalty. So there are some of the inputs services are input capital goods on which the input credit is not allowed even if the same is used for the purpose of business. So there will be like no value addition, like for the personal consumption if you are purchasing, or for the existing goods, or for the motor vehicles, or for the contractor and all. If you are taking this into consideration, like it won't be applicable to each and every goods. No value addition like means no ITC benefits. It is a personal consumption if you're taking, then you won't get any kind of ITC benefits. If you're taking for a non-existing goods, like no IT benefits you're having, and if it will be a specific list, then list of specific goods will be there. Depreciation benefit, that is no ITC benefits. For a motor vehicles, water contractor, removable property and a consumption schemes, discounted tax rates not allowed to collect taxes or other ITC claims. And immovable properties, for immovable properties, supplies received by contractor of immovable property on own account, and for the work contract for immovable property other than the plant and machinery, and for the motor vehicles, a general negative list for all motor vehicles except in 4 cases. And value addition under specific suppliers, that is food, health, beauty with an exemptions, membership of a club, rent a cab or a life insurance, health insurance with an exemptions, and a travel benefit to the employees. Motor vehicle and other convenience except when they are supplied to in the usual course of business or used for providing taxable services, that is the transportation of passengers or transportation of goods and services, and imparting training or motor driving skills are for the supply of such vehicles or conveyance. So input will be the transportation of passengers and the transportation of goods, and like importing training or motor vehicle skills for further supply of vehicles for the convenience and business other than the mentioned above. Goods or services provided in relation to any kind of goods and beverage, or outdoor catering or beauty treatment, health services, or a cosmetic, plastic surgery, except where such inward supply of goods or services is used by a registered taxable persons for making an outward taxable supplies of the same categories of goods and services. And the membership of a club, health and fitness centers must be there, and a rent a car, life insurance and a health insurance, except where the government notifies the services which are obligatory for an employer to provide to its employee under any law for the time being in force. Such inward supply of goods or services, both for a particular category, is used by a registered person for making an outward taxable supply of same category of goods and services, or both as a part of taxable composite or a mixed supply. And the tax benefits will be there extended to the employees on vacation, such as the leave or home travel concession, like whenever they want to have an entertainment and all, so they'll get this kind of benefits. Works contract services, when supplied for construction or immovable property other than the plant and machinery, except where it is an input services for further supply of works contract services. And for the goods and services received by a taxable persons for construction of an immovable property on his own account other than the plant and machinery, even when used in course of furtherance of businesses, and goods and services on which composition tax has been paid, and where the registered taxable person has claimed depreciation on the tax components of such cost of capital goods under the provision of Income Tax Act 1961. So here are some of the conditions for claiming the input tax credit. So the taxpayer can claim the input tax credit only if they fulfill the conditions. The taxpayer must be in the position of tax invoice, that is a debit note or a such other tax paying document. It is supposed to be prescribed, and the taxpayer has received the goods or services. The goods are deemed to be the received by the taxable person when goods are delivered by the supplier to a recipient or other persons or direction of the registered person, whether an agent or otherwise, before or during the movement of goods by way of transfer of documents for little of goods or otherwise. And the tax charge for supply is actually paid to the credit of the appropriate government, either with the help of cash or with the help of credit admissible in such of any such supply. And the taxpayer has to furnish the GST returns, like compulsory you have to furnish the GST returns. A registered person will have to fulfill the following conditions: that one must have to a tax invoice or a debit note or a document evidencing the tax paid systems, and he's supposed to have the receipt of the goods and services, and he's supposed to have the document of transfer of title of goods. The goods are directed by the registered person to be delivered on other persons or by the supplier, and he's supposed to have the furnishing of the returns. And if the goods are to be received in lots of installment, then the ITC will be availed when the last lot or installment is received. And if the supplier failed to supply the goods or services within 180 days from the date of invoice, the receiver has already claimed ITC. So the amount will be added to the output tax liability, and interest will be paid on the same as soon as the payment to the supplier is made. So ITC will be allowed to be claimed again, and the depreciation has to be claimed on the capital goods tax components. Then no ITC will be allowed in such cases, and one must claim ITC against an invoice or a debit note before the the date of filing the GST returns for September of the next financial year, or the date of filing the annual returns for that financial year. So for the instance, AD crop, a buyer has to purchase invoice dated back to 8th July 2018, wants to claim GST paid on that purchase. So according to the criteria set down to recon the time limit, the due date of filing GST returns for September 2019 belonging to financial year 2019 to 20 is 20 October, and the date of filing the GST annual return for 18 to 19 will be the 31st December. Whichever is earlier will be the date within which ED crop will have to be claimed. So therefore the date is 20 October 2019, and the ED crop can claim this ITC in any of this month between like July to September. And the GST tips will must be considered concerning original invoice date for debit notes, and one man has the common credit of ITC commonly used for affecting exempted and taxable services and business and non-business related activities. Since 9th October 2019, a regular taxpayer can only claim provision ITC in GSTR UB. The amount of ITC reported from 9th October will be the total of actual ITC, and the provisional ITC being 20% of actual ITC is the GSTR 2A. But the matching of purchase register or expenses ledger with is very crucial to the claim. So these will be the conditions a registered taxpayer has to fulfill before claiming and availing the ITC. But there are some items on which credit is not allowed. So we'll have that. So how it goes from the person to the buyer or to the supplier to the government. The proportionate credits. The goods and services are used by the registered taxable person partly for the business as well as for the non-businesses. He is eligible to input tax credits of goods and services, that is to the purpose of business. The goods or services tax services are to be used partly for affecting taxable services, that is plus zero rated supplies, and partly for affecting exempt supplies. Then he will be eligible for credit attribute to the taxable supplies, that is including zero rated supply. So for this purpose, exempted supplies shall include supplies on which the recipient is liable to pay tax on a reverse charge basis, and a banking company or a financial institutions include a non-banking financial company engaged in supplying the services by way of accepting deposit, extending to the loans or advances shall have the option to either comply with the above provisions or avail or every month on amount equal to the 50% of the eligible input tax credits and input capital goods and input services in that month. So the option on one's exercise shall not be withdrawn during the remaining part of the financial year. And the other relevant points will be the conditions, that is the track or an audit trial, no double tax benefits, and the maintenance the time limits. So the track and an audit trial will be the persons who will be the registered, the suppliers, and the business received goods. We are supposed to have the documents and the business paid suppliers return credits and the monthly returns. No double taxation will be there, that is like the depreciation and all, and we are supposed to maintain the time limit, like within that limit, within that installment we are supposed to have paid that. Where a recipient fails to pay the suppliers of goods or services or both, then the supply on which tax is payable or reverse charge basis, and the amount towards the value of supply along with the taxable thereon within the period of 180 days from the date of issue of an invoice to the suppliers on amount of equal to the input tax credits billed by the recipient shall be added to his output tax liability along with the interest in such a manner that it may be prescribed, and also provided that the recipient shall be entitled to avail the credit of input payment made by him and amount towards the value of supply of goods and services, and where the registered taxable persons has claimed depreciation as per the Income Tax Act on costs of goods and service tax, and where the goods are received in installment of it shall be available at the time of receiving the final installments, and the input tax credits for pipeline and a telephone tower fixed to earth by foundation and structural support shall be available as follows: that is 1/3 of the first year when goods received, and 1/3 in the next year, and the balance in the subsequent financial years. And ITC shall not be allowed after filing the GST returns for the month of September following the end of the financial year, to which the invoice rates of furnishing the annual return whichever is earlier. ITC on stock, that is transaction provisions under GST and input tax credit of eligible duties and taxes which is held in a stock, and input semi-finished goods and finished goods will be available in eligible taxpayers for the fulfillment of certain conditions. The conditions will be like categories of registered taxable persons entitled to take a credit of input subjects to a certain conditions. The conditions will be like, first condition will be like being not able to be registered under certain laws dealing in exempted goods or services. Like whenever we are dealing with this ITC on stocks, we are not supposed to deal in exempted goods, and providing work, contract services, or availing benefits or exemption notification for services, and the first stage dealer or a second stage dealer registered importer. Like before, like when you're going for a third stage, you're supposed to have a registered dealer for first as well as for second stages, and being not able to be registered under any kind of certain laws. Under central excise law, every manufacturer whose first aggregate turnover does not exceed 1.5 crore is not required to be registered or discharge the liability to pay the taxes. Similarly, under VAT, a taxpayer is not required to be a registered one in case the turnover does not exceed the prescribed limit in the financial year, which differs state to state. And under GST, a taxpayer is liable to register in case of aggregate turnover in the financial year, and if it exceed 20 lakhs or 10 lakhs, then for the special category states. Hence here the persons who were not required to be registered will not be liable to pay for the same transaction to GST, which will lead to discharge of duties under GSTs. And the providing work, contract services, or availing benefits of exemption notification for services or dealing in exempted goods or services, then in case of a person is engaged in providing services which are exempted due to the exemption notification or dealing supplies of goods on which tax is not levied, is not liable to pay the duties. However, under GST, the person who was not required to pay taxes of duties earlier will be liable to discharge the same. The first stage will be the dealer, or the second stage dealer are supposed to register the importer. So under central excise law, every first stage dealer or a second stage dealer is supposed to have a registered as a dealer and is not liable to or eligible for taking any kind of credit of excise duties. and the excise duty is involved is allowed as a credit to the registered manufacturer of a dutiable goods. Similarly, an importer of goods is required to be a registered one and is supposed to discharge his duties. And the categories of registered taxable persons mentioned above will be the entitled to take the credits. That is like excise duty, additional excise duty, and a national calamity contingent duties, additional custom duty, and a service taxes will comes under the CGSTs, whereas VAT and enter tax will comes under the SGSTs. The conditions which we are supposed to fulfill while taking the credit of eligible duties or taxes, the goods used for making taxable supplies, and under the current tax regime, input tax credit is not allowed, which leads to increased prices of goods and services. And under GST, the credit of such input taxes or duties will be allowed, will lead to decreased prices of such goods or services. So this benefit, it must be a process to a recipient of such goods or services through a reduced price, and the taxable persons must be eligible for such input tax credits under GST, and the taxable person must be in a position of invoice as well as with other document evading payment of duty under certain laws, and the date of invoice and other document must be issued within 12 months from the date of transaction, that is GST appointed date. And the suppliers of services is not eligible for any amendment under GST in the case where the registered taxable persons is not in a position of invoice and other documents evading payment of duty under the current law. And the credit of input tax will be allowed subject to certain limitations, conditions, and safeguard, and may be prescribed by the law. So here, how will input tax credit be adjusted, like how we are supposed to avail the tax credits. To pay the IGST, first we are supposed to take the input credit from IGST, CGST, and SGST, that is we are supposed to pay it on the purchases. Then to pay to the CGST, first thing we have to take into consideration the take input credit from IGST and CGST, then we need to pay to the on purchases. And if we are supposed to pay to this SGST, then we have to take the credit from IGST and SGST paid on purchases. And the process of claiming the input tax credit, that is IGST input tax credit will be the first against the IGST, then balance against the CGST, then SGST. And the process of claiming the input tax credit, like CGST, that is the CGST ITC availed against CGST but cannot be used to pay SGST liability, and SGST ITC availed against SGST but cannot be used to pay CGST liability, and CGST and SGST it can be used to pay IGST. And CGST and IGST ITC can be used to pay IGST. So input tax is in relation to a taxable person, means the goods and services tax charged on him for any supply of goods or services to him which are used or are intended to be used for the furtherance of his business. And an input tax credit under GST condition to claim ITs must be fulfilled and form one of the most crucial activity for every business to settle its tax liability. And ITC is the backbone of GST and a major matter of concern for a registered person. So the condition for eligibility to ITC and eligible ITC have been prescribed, which is more or less in line with the pre-GST regime. So these rules are also quite particular and strengthen its approaches. So the registered person will be eligible to claim ITC on the fulfillment of the condition that a provision procession of the tax invoice or a debit note or a document evading payment, and a receipt of goods and services, and the goods delivered by a supplier to other persons on the direction of a registered person against a document of transfer of title of goods, furnishing of a return. And when the goods are received in lot or installment, ITC will be allowed to be availed when the last lot or installment is received. And failure of the suppliers towards supply of goods or services within 180 days from the date of invoice, ITC already claimed by the recipient will be added to output tax liability, and the interest is supposed to be paid on such tax involved on payment to suppliers. ITC will be again allowed to be claimed. So no ITC will be allowed if depreciation has been claimed on the tax components of a capital goods, and the tax time limit to claim ITC against an invoice or a debit note is earlier of both below dates. That is, the date of filing the GST return will be the September, or otherwise the date of filing the annual return relevant to the that financial year. So the due dates of filing GST return for September 2018 belonging to financial year 1819 is 20 October 2018, and the date of filing GST annual return for financial year 1718 is 31st December 2018. So whichever is earlier will be the time period within which has to claim ITC. So for debit notes above like affecting exempt and taxable suppliers, businesses and non-business activities. So since 9th October 2019, a regular taxpayer can claim provision ITC in GSTR 3B only to the extent of 20% of the ITC available in GSTR 2A. It means the amount of ITC reported in GSTR 3B for 9th October 2019 will be a total of actual ITC, and the actual ITC in hence matching purchase register or expenses lodged with GSTR becomes a crucial.